Monday, getting ready to dig in with all of you. Make sure that we take a strong look at the markets, make sure that we keep on the right side and the pulse of the markets as well. The title of this video, what we're looking at over here, we're talking about 40 days from now. Sorry, I'm just trying to push around over here, and I don't even know why everything's coming up blue when I highlight a comment over here. I don't know what's going on, but that's okay. We're going to figure it out. Will 14 days from now make or break the market? I'm going to tie all of that in and make it make sense to you in just a little bit. First, let's get going over here. Let's first of all, we got a shortened week. We have Friday in the US is the July 4th holiday. So we're seeing non-farm payroll on Thursday. It's a pretty jam-packed week. We got Powell tomorrow, and then we have obviously jobs numbers tomorrow, Wednesday. Reminder, today is the end of the month. So do expect the unexpected on either side and do not read too much into today's move. We also have what is seems to be perhaps this week looks like we're going to see also maybe the things like the big beautiful bill, as well as, which is could be like what is that, just juice for the debt market, and juice for the debt market, juice for the US's debt, overall debt, as well as just fire for the roaring 20s. um and then also, of course, we have other things to look at, like trade deals coming and to be announced ahead of the ninth 90-day pause deadline. We're seeing things that were dramatically good news. For example, it looks like Canada was going to place the digital tax. Basically, US has the big tech, and they wanted to go ahead and start taxing that. Trump was like, okay, then we're just doubling our tariffs on you. And they were like, okay, well, we're not going to do that. The good thing about that was because the EU is also floating that idea, and that might now be out of the way. Nevertheless, France says they're ready to make a deal. Lots of, we'll find out, lots of potential fuzziness, uncertainty that's been overhanging the market has the potential here into July to be out of the way. Markets don't like uncertainty. You saw that in April, Nasdaq correcting 30%. We've since been able to fade that into a full V recovery. What happens next? Guys, for those that are interested, TradingView does have a sale going on right now, 80% off if you're looking at expert plan. But the premium over here, 70% off. And even for those on the plus, you could save $120 a year by billing it yearly. It's a good deal. I just want to make sure that everyone is aware of it. Where are we starting today's summer session off? Bitcoin here trading at $107,000. This coil underneath resistance continues. What is the market's waiting for? Are we going to be able to see the next leg up, and in the coming into the end of the year? Which way is risk going? Starting to look pretty good, but we always have to be on our toes. We never know what is going to happen, and we want to make sure that we stay in front of it and stay on the right side. Guys, summer sessions, our positioning continues. Sometimes the best thing to do is nothing. Today is like a zen-like day. We are on autopilot. We continue to hold our TQQQ position, currently 24% into profit. NVIDIA continues to hold into profit, barely into double-digit gains. Did you hear that OpenAI is starting to use Google chips? That was an interesting development. They said that it's going to be cheaper for them, or they believe it's going to be cheaper, and they're starting to use Google chips. I wonder what that means for NVIDIA and if it means anything going forward. It seems to me this major breakout on NVIDIA had everything to do with them making their software advancement, making the memory more efficient, as well as the energy cost more efficient, and the energy usage more efficient. Zen mode definitely unlocked over here, and IBIT just took that recent long over here. is currently at break even. Let's just jump in and see. Everything else is on autopilot. We continue to watch Tesla. Tesla feeling the heat right now as the big, beautiful bill gets rid of a lot of those EV handouts. And obviously, that affects Tesla's bottom line. MicroStrategy on the bid today, as MicroStrategy is it true? Is it being included into the Russell 2000? That could be. We were looking at on Friday and just making note of that as the Fed looks to cut rates. That could be quite bullish for the Russell if MicroStrategy is indeed included. I don't think it's going to equate to too many inflows into MicroStrategy. Getting included into the S&P 500 will definitely open up the door for a lot of funds flowing into MicroStrategy, but it could certainly and will certainly help, if so, the Russell 2000 to have MicroStrategy in here, especially if Bitcoin's able to continue its build into the end of the year. Aside from that, FNGU is just a soar. Look at, I mean, this would have been just a massive, 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 massive gain for us to be holding on to right now. It was unfortunate of what happened with the ticker change, especially as you saw Nasdaq correct 30% over there. That would have been beautiful. They continue. I don't like this. What is this nonsense? And how do we get it back over here? And let's see, text color, shadow, that's background, edit text. Come on. Come on. It's better. I'm going to leave it just as close to white as I can. Um, that was, I mean, ugh, right now, I mean, like, I mean, you're talking 40, 50% at least into profit right now. That's a trade that, listen, the market's always going to be there and there's always going to be opportunity. So we'll keep going at it. All right. Nevertheless, nice to see for sure over here. Open trades continuing here to move into position. We like it. Cardano taking a nice pull from the market on the short side, taking a nice 15.5% now out of the market and still close here to looking to attack on the downside. Got, we talked about on Friday the imminent, the very soon, very, very soon release of V3, V4 templates over here. And we just continue to double check to see before getting them out if we can make any type of improvements. This is where I left it off. Back end CTM continuing to just do what they can from 2021 to present. Look at the upgrade over here. If you come back to 2016, look what the improvement on this is absolutely, absolutely incredible. So taking the drawdown down to less than 15% compared to where I left it off at 18%, doubling, 2xing the overall gains. But over here, forget that. Just what happened in the last 2 years from 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 the breakout of the bull market in Bitcoin. From the breakout of the bull market in Bitcoin, we were looking at 785%. And now with a 13% drawdown, 921%, 11% drawdown. I am so stoked. We're not done yet, yo. Back end team continuing here just to make sure that Ethereum, Solana, and Cardano are all here ready to go. Just to that. So this is exciting. This is a continuation of Friday's stream. If you didn't watch Friday's stream, go back and watch Friday's stream. At the very beginning, you'll understand exactly what I'm talking about. Where I left off since 2024, less than 14% drawdown, 166. Like the improvement on the drawdown, follows through on the gain. That's beautiful. We're just out of the market right now. I'm sorry. Bitcoin here, potentially getting ready here to just let go of this trade, or hold on, flip flopping back and forth right now, and we're just zen like holding onto a few different stocks, Bitcoin, waiting here and just holding and hopefully holding longer and longer and longer. But we are on autopilot right over here. Um, and what is Bitcoin going to do? Are we going to make up the next leg? All right, let's take a look at what's going on in markets right over here, and just a quick view, a quick rundown of CoreWeave, the IPO, continuing here to hold and consolidate its massive gains. Look at this consolidation, super super strong and healthy. This breakdown would be a warning sign. The other IPO over here, Circle, finally giving back some of those extended gains. You had the IPO, and then you had the Genesis Act, giving some nice word upward loft to this over here. Metaplanet stacking another 1,000 or so of Bitcoin, and you can see here that they are lifted up. You know what I'm missing? Where's my chat? There we are. There we are. There we are. All right, let's get going over here. Let's find out what's going on over here. Nasdaq continues its mega run off of the low, and you could see just running outside of seasonality deviations, and it just continues here to really run. We were looking at the autonomy of a 20% drawdown. Bitcoin right now is towards the top end deviation. The top deviation over here was that run in 1998. There's an enormous similarity between the top deviation over here in 1998 and what's happening right now. And that similarity is that 1996, 1997, they were 2 years back to back of 20% gains on the S&P 500. And then you have 2023 and 2024 back-to-back years of 20% gains on the S&P 500. Obviously, the 1998, that one went on to run into the ultimate dot-com bubble, right? And obviously, that last third of a bubble is when you see some extraordinary gains take place. Are we headed in towards a similar situation right now, as they seem to be saying, look, the only way for us to get this debt to GDP under a little bit of control is to grow our way out of it and forget the austerity. Right now, we're just turning on all engines into growth. If so, there will be consequences later, but we're a little more concerned about what's taking place right now. That's a great question. Let's just roll back over here. And what would be a good entry if you are interested in looking at Circle? And we're gonna have to come down to a lower time frame over here, so if we get a little bit of a better look. And are we going to use over here? And this is, you just follow the momentum. Right now, a trend line break at this particular point would suggest that we're seeing upward momentum. At least that it would suggest it's a good time to manage risk, meaning that you take your entry and you know where you're placing your stop loss. We'll continue watching it in real time and see if an entry develops. Well, eventually, I'm sure one will. But for right now, this looks like the best way to wait and wait and wait for momentum to give an opportunity here to look like it's time to take a position. And that's not right now. Now this could develop differently. If you see price continue to fall down, after that we could see a something like a double black diamond entry open up. It's too soon. We'll wait and we'll monitor together right now. Give it some room. And what's neat about that is you can see this last bit of support that was broken. A breakout now, an entry onto that, hopefully would be breaking right above that whole number 200. Seems to be an area to watch, and we'll just wait and we'll pick up on monitor that one together. You could see this playing out right now on, that's kind of fuzzy, right? So taking a trend line break over here, launch off the ramp, you could see that entry over here stopped out. What happens after the entry? We used to do something like this, where you would just then go off the high, second entry, right? What's more accurate is this, though. I'm going to move it down and just to check that that's if we're looking at structure, by the way. And then it would just move it off of like this. It's very close. It's almost the same thing, but we look to be as exact as possible. And you can see that you don't, over here, you're just managing risk. The first entry on a meta planet, stop out. Second entry would be right now, continuing to run. And that's kind of what you're looking for to develop right now on Circle. If you get a similar situation where you get the opportunity to take a look at a breakout. But right now you're on pause and you're waiting a little bit. So we got a busy week ahead of us. Right now we're on autopilot. And the title of this video is why the next 40 days could make or break the market. As we look at what's taking place over here, where does 40 days put us, right? 40 days as we're in the beginning right now of July. That puts us into really somewhere around the middle of August. The middle of August would be right around over here. And, we've talked about looking at this chart and saying, and we don't know, this is just a lead in, would we have some type of clarity around that time of knowing past cycles after a 20% drawdown coming out of it, once they've made it that far out of the correction, has the run up been able to continue? And then we've looked at other areas, and it's really like as we get towards the end of September, that's really going to give us a lot of clarity of how things look into the end of the year. And that's likely where we're going to have the clearest, and the markets are never clear. It always takes a lot of work. It always takes being able, when presented with new data, to be able to change your opinion, to pivot on a dime. A lot of people aren't able to do that because it's very easy. Like, oh, melt up into year end and then market crash. Ooh, I like the sound of that. So, like, it's gonna melt up. I'll be able to sell into the melt up, and then it's gonna crash, and then I could buy back lower or sell short. We like people like to hear certainty about what's gonna happen, and they like it when it's dynamic, right? Guys, I can't believe, and when I look at all of these macro channels, and just like we've been in this bull market now going on 2.5 years, and every single video is about the market getting ready to crash, Great Depression, yada yada yada. That's why we born the meme. The markets are not crashing because like people just are always looking for the crash. Either which way, let's take a look at the data and see what I'm talking about over here. And we're looking at over here, first of all, hard data versus soft data. And we've been saying, you know, we have to watch the consumer and make sure the consumer stays strong. Hard data. We have to watch the job market. And one of the most amazing pieces of research I've seen over the past couple of years was when TXMC Trades put out, when there is indeed a soft landing, what happens is you see the job market make a turn, and then you see it continue to improve. And we've continued to see just like the soft weakening of the job market. By the way, one thing that really I just want to bring before everyone's mind right now is um over here, right? As long as payrolls stay above 100,000, and or as long as bonds don't rise over 5%, the current melt up can and likely will continue. When we talk about the melt up, we're talking about over here the melt up into year end, this ascent. And obviously, as you look at very seasonal, favorable time of year for the markets. And payrolls, is that the only thing? Obviously, inflation is another hard data that we're watching. And disinflationary forces, regardless of what the chairman tells us, that the tariffs are inflationary, and they're not. And regardless of he tells us that, you know, guys, don't worry, inflation is transitory, which it was not. We have to watch. And right now, it looks like that disinflationary forces are definitely continue to be entrenched. That could change. But when we talk about change, like if we were to see, for example, the price of oil begin climbing, that would say, okay, we're going to watch, and we're going to watch for some like month over month upticks in inflation. But expectations are that, you know, we just saw war in the Middle East, and oil was not able to get above 77. I was just curious of where it is today. I just wanted to check out what oil is trading at as we're talking. Um, Back down to 65, right? And continuing, oof, continuing so hard data. We're watching jobs market, we're watching the consumer, and we're watching inflation. And this chart, by the way, it shows 120 days since the catalyst. I don't know what the catalyst is. Here's the problem. So well, I'm looking at Goldman Sachs research over here, and they're talking about the number of days since the catalyst. And I don't know what the catalyst was. So all as I could take is this at face value and say, right now, we are 120 days in. And right now, I'm sorry, current episode where we're just about 80 days past, right? And in the past, when you see 80 days, you could see the hard data converging upon the soft data. And then what happened when you headed towards recession, as you move towards 40 days from now, 120 days, you saw a decline in that hard data, right? So right now we're moving towards that, the hard data and the soft data around the 80-day mark converging on each other. We want to see what happens from here. Now, are there any indications that in the next 6 weeks we're going to see anything that would just rug pull the job market? It's not really looking like that at all. It looks like that the hard data is going to remain intact. Are we going to see inflation all of a sudden jump out of control as Powell expects it will? Likely not. Are we going to see a softening of the consumer? Maybe a softening, but I don't think we're going to see any type of rug pull. Why it's important is this. I've shared this chart with you many times before because we're looking at September as the Fed beginning its rate cutting portion of the cycle. Now, they did cut. That first cut came right before the election, that 50 basis points cut, but they've been paused ever since, right? So that wasn't really the beginning of a cutting cycle. If you look at this chart and you look at where it says in 2019, July 31st, 2019, we did see at that particular point in time, we saw 75 basis points of rate cuts, and then they didn't cut again until you get to March of 2020. So I do look at those kind of like as the same cycle because the Fed begun their rate cuts, but then don't forget the market melted up from there. The market actually, S&P went up 15%, Nasdaq up 20%, Bitcoin was roaring, gold was market like off of those first normalization cuts really melted up. And then there was a pause in between until they began cutting rapidly, right? And that was a panic cut though. Okay, so we're going to leave panic cuts out of it. Panic cuts are obviously very, very, very bullish when you look out a year from now, a year later, because that means that in panic cuts, they're cutting rates as low as possible, as quick as possible, so they could be super accommodative. They could return to outright easing. We're looking at the difference between cutting into normalization and cutting into a recession, right? And it doesn't appear that right now that we're headed towards recession. Actually, it appears that we're actually headed into uh we've been consolidating here all year, and we're about to head into a period of growth, right? There are a lot of things that are pointing to that direction. Nevertheless, we don't know what's going to happen. We want to make sure that we're prepared mentally either which way. We know our positioning through following our rules is going to keep us on the right side, right? Which is obviously priceless. But look at the difference cutting into normalization 12 months out and cutting into a recession. S&P 500 either up, 13% on average cutting into normalization. We're down on average 11% cutting into a recession. This is why I say we could be looking at in the near future. I put a 40-day countdown on this because it makes for a good title, but specifically because we want to watch what happens. The average event driven recessions, we want to watch the direction of the hard data, and not just over the next 40 days, but over the next couple of months for sure. And we want to see, you know, the question is the Fed cutting into normalization and or cutting into recession, because it really matters. Um, Again, good on you. And so many people are split on this, depending on what people's political affiliations are. Everyone is real. Dollar continues here. We're continuing to watch the dollar closely. Obviously, we've been flip flopping ever since we had that beautiful rundown, and then we've been flip flopping, staying on the right side. But I wonder this week, as we look at further trade deals coming in, if the dollar reacts to that near term. Again, that was my hypothesis, that the dollar would respond well to that. But we're following the technicals, and right now we're undergoing a nice sell impulse, and we're on the right side. um where was I coming back to? Big shout out everyone out there on the replay crew. I don't know. I don't know. Oh, Powell being political. I mean, look, it kind of runs both ways, and I very much think that when he cut 50 basis points ahead of the election, with the job market in much better shape and inflation much higher, that was political. But people who you know that they support Powell will say that, well, that wasn't political, and that Trump is being political by now saying that, he's going to fire Powell. Powell's doing a terrible job. He's going to hire someone that's going to cut rates. And listen, whatever. I mean, whatever, in the sense of people are going to believe what they want to believe, and you know I don't know. I personally think it's very political, and on both sides. I don't even know if political is the right word. I think people have different, um, let's say, incentives, and that's the problem. Good look at gold. Gold over here. Silver holding 36, still making 36 feel comfortable, as Bitcoin makes 100,000 look comfortable. Um, I'm trying. I mean, what could I say? Gold. I will say this: gold doesn't look tradable right now. I do believe that the next time gold takes out its all-time high is going to make a major. It's going to continue its upward momentum. It's going to continue making legs up. I think the best chart I could show you right now, because I don't have it like up here right now, though, is look. Just pull up a chart on the monthly of gold, and look at every time that the RSI gets way overbought, and anytime then gold pulls back, like consolidates, and then makes a new high above it, it makes the next leg up. And look over here. Here's the next leg up. as soon as price takes out the high price of where the RSI was way overbought. Now you come back all the way down to here, right? So on this one, even it didn't really pull back, but it did pull back a little. Price made the higher high. I think that, and especially if we are able to enter a period here where let's let's say like the equity markets are higher into the end of the year, all right, and let's say I don't know that that happens, obviously. If that happens, and if coming into the fall and winter, like we're looking at risk on at that particular point in time, I think this is perfect opportunity here as for gold just to continue consolidating. And by consolidating, I mean not making new highs and into drawdown before it will eventually make its further highs. And what a pullback would look like, I don't know. You know, I I don't know at this particular moment. Right now, that's my read. If we start seeing things like um that hard data all of a sudden falling apart, then I would say that then gold likely we're gonna be looking for it to continue higher, because gold should perform well into the slowdown. So right now, I think that gold has obviously come really far, really fast, and like just give it a second here. Unless if it continues to make higher highs, though, again, I guess that's what I'm saying. I wouldn't be looking for gold I'm not looking for gold for an entry or anything close, and unless all of a sudden it just continues making new highs, then at that point I would become attracted to gold. um Otherwise, hopefully, just when it becomes clearer. Right now it's not clear for an entry, for a long entry. You know who's got a lot of XRP? Ripple has a lot of XRP. I love going to Coin Market Cap and looking at the total supply, and then Google how much XRP does Ripple hold, right? And every time that thing rips, they just distribute into it. So check that out. Yeah, so we were way bullish on gold, way lower, and at this particular point in time, I mean, gold is relentless. Should you be looking at on a shorter time? you know, is would be gold be able to make a breakout above? And if it does, do you want to be involved? You know, um, we could watch it together, but gold doesn't seem at this particular moment to me, and that's my belief, my bias. It looks like that right now. We are looking at, and again, these next 2 weeks could for sure be bumpy. And I've been saying that, and they haven't been. Seasonalities point to that, the last 2 weeks of June being slightly off, and instead we continue going the other direction. And you know, but anyway, we'll watch it a little closer as we continue forward. So keep it short and sweet today on this Monday. Silver it's amazing. It's continuing to hold this 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 is bull market. This is Bitcoin bull markets on Bitcoin. And I mean, an open position of 62%, if you're trading that with leverage, is I hope one day to be able to model. So I can't yet. I've tried improving on this, and I can't, and I want to, but because during that 10-month consolidation, this wasn't good. That 10-month, that 10-year consolidation, this wasn't good. So anyway, there's always a way. But silver over here at 36, I mean, unbelievable. Silver trading here at 13-year highs, and you know, looks great. Continues to look great. Now, obviously, as long as we hold above this trend line, this move looks super healthy. If we break below that trend line at any point, I mean, at that point, we something's going on, you know. But right now, it looks super, super, super healthy, super, super great. All right, everyone. Short and sweet today during the summer sessions. We'll be back at it tomorrow. Have a beautiful day, everyone. God bless you. See you all back on the inside.